Thank you all for taking time out of your very busy schedule to join us this afternoon. We've been really hard at work on this product. We've spent a lot of time and energy getting it just right for you. So we are very excited to officially launch the Difference Health Plan, which is a self-funded solution for mid-sized businesses. So I am Taylor Britt. I'm the Senior Director of Marketing for the Difference Card. I get to do all of this fun stuff like these webinars. If you've attended one of our webinars in the past, I'm sure you've seen me. I'm happy to have you on board again. Just a few housekeeping items before we get started today. This is the most popular question. Yes, we are recording today's webinar, and as soon as it's ready, we'll send it around to everybody. So if you have a friend or a coworker that wasn't able to attend, they're going to get access to everything. We'll create a nice little microsite for you. It'll have the recording, it'll have the slides, it'll have any resources. So do not worry, that will come your way. And then also feel free to pop any questions into the chat or the Q&A box. We will do our best to answer them as they pop up. However, we might save some for the end if that requires a more detailed explanation and we want to present it out to the audience. So with that, we have got a jam-packed session today. Let's go ahead and get started. I'm happy to pass it over to Josh to introduce himself.
Thank you, Taylor. Hey, everybody. Greetings from sunny Chicago. I'm Josh Pyzik, Director of Sales for the Midwest and West markets. Happy to be with you. Thanks.
Hi, everyone. Good afternoon. My name is Stephanie McNellis. I am the Director of Client Retention here at the Difference Card, located in Westchester, New York. And I have been with the organization for 15 years now.
Welcome, everyone. I'm Chris Calderon. I'm our Chief Revenue Officer, and I've got the pleasure of working with all of our sales and account consultants across the country. And we're very excited to introduce the Difference Health Plan to all of you today. So just to give you the roadmap for today's discussion, I'm going to start really high level and talk about the self-funded market in general and where the Difference Health Plan fits into that market. Then I will pass it to Stephanie, and she's going to take you through the medical cost containment solutions that really make the Difference Health Plan special. Finally, Josh will close our discussion today. He's going to talk about some of our pharmacy strategies that, again, make this health plan different from a marketing perspective. So why don't we start by just talking about the problem? And I think this is one that you all are facing today, because we have seen the cost of health insurance and healthcare skyrocket over the past 10 years. And we got a little bit of a break in 2021 where claims kind of came down a little and renewals were not as bad, but we saw that quickly reverse course again in 2022. And based on all the renewals we've seen for 1/1, it seems like we're heading in that same direction for 2023. So this is a tough problem. How to combat the rising cost of healthcare, increases in cost sharing, deductibles, and the average cost being over $20,000 for a family, just really unaffordable on average. This is the problem that all of your customers are facing that we're hoping to address with our solution today. So before I get into the solution, really want to ask all of you and pause for a second. What's the average renewal increase that your health insurance clients are receiving? Just think about the last few months. What kind of health insurance renewals have you been seeing, especially with all the 1/1 activity here? Is it low in the single digits, 5%, 15%, 25%, or are you in that major 35% big renewal range? What kind of average renewal increase are you all seeing?
Yeah, Chris, we're getting some good answers here. We'll give everyone just a couple more seconds to make their selection, and then we'll share the results. All right, let's see what we got here. It looks like the majority, 68% of you, are seeing a 15% increase. We've got 17% of you seeing 25%, 3% are seeing that 35%, and then 11% are seeing 5%. So it's kind of spread across the board there, but a good chunk seeing 15%.
Yeah, so 15%, right? Not bad in the scheme of that poll question, but compare that to inflation, right? And we're at record inflation, 40-year high for inflation, and healthcare renewals are still outpacing the course of inflation. So if you've got a customer that's maybe in the fully insured world today or level funded, Well, our recommendation is let's take the first step and let's introduce to them the MERP funding solution, which is what the difference card has been known for years. That's a great first step into the alternative funding strategy. And they take on a little bit of claim exposure. They pay some claims through the difference card without taking on too much risk. A great way to save 18% on average off those fully insured policies. But we fully recognize that there's another step above that can save even more money, and that's going completely self-funded, where we're paying all the claims and we're protecting the customer through stop loss on the aggregate and at the individual level. And there's a lot of opportunity for additional cost savings as we take that next step up. Now, it's not the right fit for every customer, right? There could be some risk situations that cause the customer to need to stay maybe in a MERP funding solution. But today we're going to focus on, for those customers that self-funding makes the sense for, let's show them some solutions on the difference health plan side. So that's what we're going to focus on today. And before I get too far into the solutions, and I just want to talk a little bit more about kind of the market that we're seeing from a self-funded perspective. There really has been a big trend on the self-funded side. 20 years ago, it was only 40% of the market that was self-funded. If we look at the 2020 data, 67% of the market has shifted to a self-funded health plan. So clearly, the majority of employers are seeing that that's a great strategy to reduce the rising cost of health insurance. And there's still room to go to show some more of those employers why self-funding makes sense. So for some of you that may be new to the self-funded market, we wanted to just share with you some of the basics of why self-funding makes sense and why so many employers have gone this route recently. So here's a real basic example. This is like a 200 life group that was spending $2.5 million in fixed cost. That was their fully insured premium today. And one of the big benefits of going self-funded is that they get a massive reduction in fixed cost. Instead of $2.5 million, they pay $500,000. So that's $2 million of savings right there, right? But they can't bank all of that. There are going to be claims expenses. And in this example, about 1.7 million of expected claims gives this group about $300,000 off of their fully insured plan. Now, it is typical, though, that the maximum, the aggregate liability in a self-funded plan will often be above the fully insured maximum. So this is where you've got to talk to your customer to make sure it's the right fit for them. You might have a very budget conscious group that needs to be in a fully insured world where their maximum is below this level. And one of the value adds that our sales team is going to help you all with is a feasibility analysis. So we've got the data and analytics to run a group through our system and say, is this group a good fit for self-funding? So if you've got the information, we need some census data, we need some claims data, we can actually give you some feedback before you even go to market to say, does this group have a good chance of beating the fully insured plan that they're in today? So again, one of the value adds that our sales team is going to deliver to all of you is that feasibility analysis at no additional cost. So I'm going to continue down this path of talking about why self-funding makes sense. And I'm going to talk about one of the most basic concepts here, which is premium tax. And I think everybody on this call can agree that we want to pay as low premium tax as possible, as low tax in general as possible. It's one of the goals here. So in a fully insured world, we're going to use 3% in this example. I know it ranges based on the state, but 3% premium tax on a fully insured plan is $75,000 in that example. Now, MERP funding gets some of that premium tax down because we're lowering the premium, which is the tax is a percentage of that. So we save about $20,000. But the self-funding takes it to that next level where now we're only paying tax on the stop loss premium. And in this example, that premium is $350,000. So that's a $10,000 premium tax. It's about a $65,000 savings just in tax alone. So just to give you one example of why groups are moving in this direction, going self-funded. So next I want to talk about, well, why is the difference card unique in this market and what makes the difference health plan really different? And one of the things we did is we did a lot of design work talking to our consultants, to all of you, and to some self-funded experts on what makes a great self-funded plan. And we talked to a lot of really intelligent consultants that were way up market in the national account space, and we got some great ideas from them. And our whole idea here is to bring some of those concepts that big Fortune 50 companies are doing down to the mid-market or small group space to give them some of those same advantages that big companies get. So just a couple ideas are access to multiple national networks. You're going to hear from Stephanie talking about Aetna, Cigna, Blue Cross Blue Shield as options from a network perspective. On the pharmacy side, one of the things that Josh is going to highlight is our pharmacy coalition. That's another big company idea, doing a pharmacy coalition that we're bringing down to the small to mid-sized space. So those are just a couple of the examples of things we're going to talk about that make the Difference Health Plan unique. A few more of those strategies on the pharmacy side. You're going to hear Josh talk about things like specialty carve-outs, 100% rebate share on the pharmacy side. There's a lot of money to be saved from a transparent pharmacy option, and that's going to be one of the core strategies that you hear us talk about, and Josh is really going to focus on that strategy. From a healthcare perspective, there are really some exciting things going on with transparency tools, right? Just recently in July, all of this new data came out where we can see what the real cost is with that network, with that provider in this area. And Stephanie is going to talk to you about our care navigation solution that actually uses those transparency tools and guides members and gives them incentives. So that's another unique part of our strategy. And then there are some basics that you've come to love with the Difference Card. Great service. We pick up the phone quickly. We get back to our customers quickly. We pay claims quickly. That's all a part of this system, just the basic blocking and tackling. The Ben admin system we're going to focus on is included. That gives you some top tier technology for employees. And then integrated consumer accounts is another component that we'll focus on. So before we get too far into the cost containment solutions, just want to talk about the basics, the blocking and tackling of administering a health plan. As we did a soft launch of this program over the summer, we talked to a lot of brokers and consultants. And one of the main questions is, well, is this a startup health plan? Are you going to be paying claims for the first time? And the answer is no. I mean, we've been doing TPA administration for over 20 years, and we have partnered with a backroom self-funded expert that has been doing this for almost 30 years. They have 500,000 members in their block of business, and they give us the basic technology and expertise to make sure we're paying claims properly in a timely manner. And they really have a flexible design to allow us to customize the solution for your specific customer. And that flexibility, something you get with an independent TPA versus a big carrier, that's going to be a big trend as we talk about our solution throughout this discussion today. So I mentioned the consumer accounts being a core component of our health plan, and it is because it's a very important part of the health plan. It's something that members touch on a daily basis, whereas they don't always go to the doctor or the hospital every day, but they may be using their transit plan, their HSA plan, their FSA. These are things that not every independent TPA is talking about. They often do not have the right solution for the consumer accounts platform. And this is something that the Difference Card we're really experts in this. We've been doing consumer accounts administration for over 20 years, and the actual MasterCard, right? We've got that technology down to a total science. So we know how to put together an integrated platform where the HSA is online with all of the rest of the benefits. We've got some top tier strategies on each of these. And you've probably heard us talk about these programs in past webinars and sessions, but having HRA, HSA, FSA, all available on one website, one customer service team, one MasterCard. That's really a big differentiator for us. and it's an important part of the health plan. Being a consumer first health plan is really key here. Then I wanted to also give you a snapshot of what the new ID card will look like too. So this is just a sample of a group that'll have the Difference health plan. It'll have their Cigna logo on it if they're using the Cigna network, and the Magellan pharmacy information if they're using Magellan as the PBM, just in this example. So there'll be that ID card identifying the network in the PBM, and then there'll be the MasterCard, which still handles the consumer account side of the health administration. All right, finally for me, before I turn it over to Stephanie, I wanted to highlight the value of the benefits admin system. And this is something we talked about over the summer. We did a few webinars on this topic. Going into open enrollment season, this is very important because it automates a lot of those manual processes that may take up a lot of your time today, right? Collecting forms and filling out spreadsheets. We can do that all automatically using the online enrollment system. So on every Difference health plan client, we are automatically including Ben Admin. Now you might say, I don't need it, and we can take it out, that's fine. But a lot of customers still do not have a top tier Ben Admin system. And this is not just for open enrollment, it's end to end. So it includes new hire elections. If you've got a terminated employee, this connects to the COBRA system, sends out their COBRA notifications, collects premium online, really does everything from start to finish from a Ben Admin perspective. It's got all of the ACA modules built in, and there's a lot you can do with this. The last thing I want to highlight is the decision support tool. We know how hard it can be to communicate and educate employees on benefits. Giving them that hyper-personalized approach to open enrollment education is something that we've gotten a lot of great feedback from customers on, and just guides members through the right decisions on how much to put into their HSA account, which health plan is right for them. That's all built into this health plan solution. All right, so I'm going to pause for a minute and pass it to Stephanie, and I think she's got a question for you all.
Thanks, Chris. I do have a question. I would love to hear from all of you, and please select as many choices that apply here. But what cost containment solutions are you currently using for your self-funded customers? We have network discounting, reference-based pricing, care navigation, and wellness programs.
Yep, I'm seeing a really good mixture here, and this is multiple choice. So choose whichever option maybe applies to your clients, whether it be network discounting, reference-based pricing, care navigation, or wellness programs. We'll give everyone just another second to vote. All right, so a really good mix here. We've got 72% are using network discounting, 41% are doing reference-based pricing, 46% have a care navigation tool, and 55% are utilizing a wellness program.
All right, well, that definitely takes us a nice segue into our next topic here. And I'm really excited to tell you about the cost containment strategies that we've put into place for the Difference Health Plan. In the early development of this product, I was able to poll our broker partners and clients and ask what would they want to see in a health plan. It became very clear our clients wanted national provider access in order to limit any disruption to their employees. So having multiple national PPO networks available to our clients became a top priority for us. We provide access to the Cigna, Aetna, and Highmark Blue Cross Blue Shield networks for groups over 50 lives. And for any out-of-network claims, we all know how costly those can be. We've partnered with Occunet to achieve further discounting. Within a health plan network, navigating the healthcare system can still be very confusing. And the goal of our care navigation system is to simplify the healthcare process as much as possible for our members. The care navigation team directs members to the highest quality and most cost-effective providers. So our members can feel really comfortable knowing that they have this concierge team supporting them. So you might be asking, how does care navigation help employers to reduce claim spend? Well, one example is emergency room redirect and getting members to the nearest urgent care centers. This starts at open enrollment, and early education on this is crucial. Our Ben Admin tool shows members the nearest urgent care center, which is powered by Google Maps. Also, when members engage our team through either the app or call center, we will encourage urgent care utilization there as well. And then the second opportunity for savings through care navigation is with shoppable services. So Chris had alluded to this in the beginning, but recent data released by all carriers and providers on July 1st of this year shows the top 500 services. So let's use an MRI as another example. By going to an outpatient radiology facility versus going to the hospital, it can actually save the health plan thousands per visit. The next step to this is incentivizing those members who use the care navigation recommendations. So if they follow the recommendation, then they are rewarded with money on their difference card. The difference card has administered card-based incentives for over 10 years. We are very familiar in this space. And our program is unique, being that employers can customize these incentives to best suit them. One example may be to give the member a portion of the savings back through Healt savings account dollars. And in this example, you can see that the member who did follow the recommendation received an employer contribution to their HSA of $150. So you can really think of this simply as a cashback credit card. In addition to the care navigation incentive program, we've been administering wellness programs on behalf of our customers for years. So these programs have encouraged healthy behaviors to drive down long-term healthcare expenses. And we recommend keeping these programs really simple by completing your personal health assessment and earning 50 points by engaging in these activities listed, or get your annual physical. All of this can be customized by our employer groups. We have a client who implemented a wellness program over 8 years ago now, and they've had a lot of success with participation, upwards of 70%. And this can lead to lower claims and lower renewal increases year over year. So how do we do it? Getting employees to participate in healthy activities is not always easy. If you're familiar with wellness programs, then you know that the average wellness program has about 12% employee participation. We have been able to get over 70% participation by tying the program to the benefit structure. So in this example, we are incentivizing a lower deductible if the member meets their wellness goal. So for the member who participated in the wellness program and met those goals, they received a lower deductible of $1,500. The member who chose not to participate would receive the $2,000 deductible. So thank you for allowing me to walk you through our cost containment strategies. I am now going to pass it off to Josh, who will dive into the next topic with you.
Thank you, Stephanie. I, similar to Huey Lewis, want a new drug benefit management solution. So I'm going to take a couple of minutes and talk to you about our PBM coalition. But before we do that, let's launch another poll question. So how much of the market is controlled by the big three PBMs? You may know who they are, you may not. Little hint, they're all owned by major and very large insurance companies. So we have a choice of 35%, 50%, 75%, and 90%. So throw your answer in there, and then let's get into this cost containment strategy that's going to be a big part of the Difference Health Plan.
Great segue, Josh. Love the Huey the News reference. That was amazing. So yeah, we'll give everyone just one more second to vote here. We're seeing some people lean towards some high numbers.
Okay, yeah. All
right. So the winner here is we've got 49% of the audience voting at 75%, that they control 75% of the market. 40% said 90%, and then we've got 50 and 35. So they're onto something.
Yeah, they are. And as suspected, we've got a smart group here. So let's get into who the big three are. and why it's so important for them to control the prescription drug market. So CVS, there's a CVS in every town in America. They're the largest. That's the Aetna aligned PBM. You may remember that acquisition a few years ago. Second to CVS is Express Scripts, and that's the Cigna aligned PBM, and then Optum RX with aligned with United Healthcare. And within those fully insured arrangements, there are costs that are being hidden in the pharmacy portion of the medical plan. And so I want to take just a minute and kind of contrast that traditional PBM model versus a transparent pricing PBM model, and show you kind of how some of those solutions that we can implement with our PBM coalition that can help save your clients some real dollars and generate some real savings. So in a traditional model, there's a term that you may have heard of in the past, referred to as spread pricing. What is that? So pharmacy benefit managements, they purchase drugs at a wholesale price, and then they pass along those drugs to the consumer, to the end user at a retail price. And that spread in price is really the profit that they make by controlling those prices. If you contrast that to a transparent PBM model, as our coalition is, it really eliminates that spread, and it passes those wholesale discounts directly onto the consumer, the client, and the end user. Another real benefit of a transparent PBM and the coalition that we've put together is 100% rebate pass-through. So any rebates that can be achieved from the drug manufacturers directly will be passed through directly to our clients. So just a couple of solutions there that are going to be options for the 3 PBMs that we've formed a coalition with. And it's important to note that when we were out building this plan, and this has been in the works for the last 6 or 8 months, went to RFP with 17 PBMs, and even the big 3, and reviewed the contracts. We needed strong language in the contracts, and determined that the big 3 weren't the best fit for the types of groups and the markets that we are working in. So the coalition that we formed, Magellan, Maxor, and Pharos, those will be quoted with all opportunities coming through in RFP through the Difference Health Plan. And so that's going to create a competitive environment. And we're going to be analyzing those and providing those solutions, those quotes back to you and back to your clients, and really give you the most competitive bid for that particular group and that particular client within the market that we're working within. So one other cost containment solution on the pharmacy side, at least, is a specialty carve out. So everyone knows, whether you're on a specialty med, someone in your family is, or you've heard a horror story about your neighbor or one of your clients being a really, really high cost prescription drug. An option within our pharmacy coalition is to carve out specialty medications directly from the medical plan. Now, there are ways in which we're going to kind of go down the ladder and get those drugs paid for. We're going to first look for discounting and payment directly from the manufacturer. If we're not successful there, there's government subsidies that can be obtained. And if an individual's member's income is too high and doesn't qualify for that, we have the ability to source prescription drugs, specialty drugs on an international basis. And then finally, after we've exhausted all of those efforts, with no success there, it will go back to that pharmacy, that specialty pharmacy, and the drug will be paid. So the combination of these cost containment solutions can really lead to some deep savings. Typically, it equates to about 16 to 18% overall savings. And again, going back to the pharmacy side, it's that pass-through of wholesale pricing. It's 100% rebate pass-through to the client, anything that can be achieved from directly from the manufacturer, and it's that specialty carve-out. So again, we're really excited to launch this product. Pharmacy is going to be a huge piece of this. You can rest assured that we've done our due diligence and we've put together a really competitive pharmacy coalition, and we're going to be excited to dig in and to show you some options on a very specific basis. So with that, I'm going to hand it back over to Chris. He's going to talk about implementation and taking it to the next step. So on to you, Chris. Thank you, everyone.
Yeah, thanks, Josh. And really a lot of interesting different strategies there for cost containment on both the pharmacy and the medical side. I'm sure you all have a lot of questions on how they each work, and we can spend an hour on probably each of those topics. We're hoping today to just give you a little taste of each of those strategies. And then if you'd like to learn more, spend some time with your individual senior consultant. We'd love to dig in further on any of those cost containment topics, because each one of them has their own details that we can get into. But what happens when we've got a customer that says, yes, that's interested in moving forward? Well, Difference Card for years, right? We've had the sales, implementation, account management infrastructure to make sure that we can support you and your customer end to end to make sure that their experience with the health plan is top notch. So anything from finance resources, our IT department, the customer service and claims team, we have that all set up and structured at the same high level of service that you have come to love from the Difference Card. You'll see that same quality on the Difference Health Plan side of the house. So we get a yes, one of your customers is interested in moving forward. The first step is to have an implementation kickoff call with us. And that's where we do a lot of the data collection. And we go through all the different line items of how we're going to set up their banking and the different cost containment structures that they have selected. So we'll do all that heavy lifting for you, coordinating with the different point solutions and vendors. And one of the other values, again, of using an independent TPA like the Difference Health Plan is you may have your own strategies and point solutions that you want to use. And we are very flexible. We're open to that. We just have to make sure we coordinate that process. So if you've got your own telemedicine solution or your own strategy, let us know about that, and we can coordinate that during the implementation process. Then we've got several quality checks in place to make sure that we've got all the right data to deliver ID cards and set up the system in a timely fashion. That's a part of our standard implementation process. So the next logical question is, well, what about the stop loss and what about quoting? How do I get a quote for the Difference Health Plan? A lot of consultants that I've talked to have asked, well, do you handle the stop loss? Do we handle the stop loss? How does it work? And we're flexible here. If you have your own stop loss quoting department, some of you work for very large organizations that have your own stop loss placement desk, that's fine. You can use your own stop loss and we will not penalize you in any way. Totally fine with us. On the flip side, if you're interested in the Difference Health Plan handling all of the stop loss placement, we will do that for you. And we've got access to multiple top rated carriers across the country. We've just listed a few of the A-rated carriers on this page today. But how do you actually get a quote? Well, in order to quote the stop loss, we're going to need some more information than maybe you have typically sent the Difference Card. So things like high claim information, 24 months of paid medical and pharmacy data. These are some of the quote requirements, and I'll just stress them again here. So if you're interested in a quote for the Difference Health Plan, we would love to put it all together for you. We'll have a detailed meeting to walk you through it. But the first step is to send in their current rates, their renewal rates, their plan design, or their summary of benefits. We do need a detailed census file. If it's a smaller group, we can do it without claims, but we're going to need dependent level census data. If it's a larger group, let's say over 100 employees, then we will need claims utilization information, ideally month-to-month paid medical and pharmacy data, and then the corresponding high claim loss information. And the more data, the better from a stop loss perspective. Just help us get more competitive with the stop loss carriers if we are quoting that. Then finally, let's talk about broker commission. So you can add in on a per employee per month basis, whatever commission level you would like. We'll add that in as an advisor fee. We can also add it into the stop loss if you're interested in that, but our recommendation is to do it on a PBM basis, because when you add it into stop loss, well, that increases the carrier margin and the taxes by a couple percentage points. So in order for you to be as competitive as possible, we would recommend you put it in as a PBM basis. And the ones we've been quoting so far, I've seen anywhere from $30 to $40 per employee per month from a advisor fee perspective. All right, well, I want to take a minute here and answer a couple of the questions that have come in through the chat and through the Q&A. One of them was regarding the network access. So Stephanie mentioned Highmark, Cigna, and Aetna. Those are the three national networks. There are some restrictions, just want to be clear about that Highmark, Blue Cross Blue Shield, we can only quote if the company is headquartered in Pennsylvania. We have a lot of customers in the Pittsburgh and Philadelphia market where there's a good fit there, but it has to be a Pennsylvania customer for us to quote that Highmark, Blue Cross Blue Shield network versus Aetna and Cigna, national networks in all 50 states. So no state requirements. Another good question that came in was about the minimum size. And typically down to 25 lives, we will quote, we have access to these networks down to 25 lives. We think it makes more sense above 50 or above 100 lives to be self-funded. And then there are certain states where, like New York or California, you've got to be above 100 lives to be in a self-funded arrangement. So those are some of the big questions I saw come in. Josh, Taylor, Stephanie, anything else we're missing here? Let's go through the chat.
Yeah, so Chris, one popular question that is coming through from a couple of different attendees is group size. Is there a minimum? Is there a maximum? If you wouldn't mind speaking to that.
Yeah, no maximum for sure. We'll work on any group size. We are anticipating the 50 to 1,000 life space to be our sweet spot because that's really what we're targeting. We're trying to bring those big national account strategies down to that mid-market space. So I'd say 50 lives and up, but we can actually go a little bit lower in certain states. We can go down to 25 lives.
Great, good to know. And just kind of piggybacking off of that question, is this a good fit for a group that is looking to go self-funded for the first time? Joseph had a question that, claims data is not typically available for those mid-market fully insured plans. So how would you take a client self-funded for the first time?
Yeah, no, we certainly are anticipating a lot of the volume is going to be fully insured conversions and groups that are going self-funded for the first time. So we do have the ability to put together stop-loss proposals on groups where we do not even have the claims data. And in that case, that's when we would need a dependent level census file. So we need data on the employees, spouses, children, and then we can run it through an analytics tool to come back and say, okay, this is a good fit and we will be competitive and we'll have some stop loss options. So not going to be every group that is the right fit if they don't have claims. And then if they do have claims, we've got a lot more options because we can analyze all of that data and come back to you with a competitive proposal. I saw one question in the chat here about when is it available? We're targeting a 1/1/23 effective date. So we already have a lot of quotes in the pipeline that we gathered just during our soft launch phase. But 1/1/23 is our official go live date for this solution. And we've got a lot of time right now to make sure we get the quotes to you and implement in a proper manner. There's a good question, I think it was by Adam, about like, what if they're in the MERP today? Will we do MERP and self-funded? And yes, absolutely. That kind of staircase that I showcased, we will definitely show you, here's the MERP solution and here's how much that saves this customer. And then if you want to go one step up, here's the self-funded solution. So that's definitely a part of our strategy, is to be your resource for alternative funding. And we'll show you again, here's the MERP strategy to kind of take that first step in, pay some of your own claims, wrap the difference guarantee, which kind of looks and feels like aggregate stop loss around it, and then also show you true self-funded on a difference health plan basis with individual stop loss and true aggregate stop loss wrapped around that product. So more than happy to quote both options for you, Adam, if it makes sense for that specific opportunity.
Great. That's really good to hear, Chris. There's a good question here in the Q&A about the turnaround time on proposal. I know we just went through the implementation plan, but in terms of timing, what do you really expect there?
Yeah, I think from a TPA perspective, so I saw another question about like, who's the TPA? Well, difference card, the difference health plan, we're the TPA here, and we can get you a services only TPA proposal in a day, right? That's easy. I can show you the different services. We just need to do some discovery in terms of which network may be the right fit. We may want to talk about which PBM solution is the right fit. So that's a relatively easy process in terms of quoting the services only side of things. But if you're interested in having the Difference Health Plan quote the stop loss, we have to be realistic about the stop loss market and how long it takes for them to come back with quotes. So normal times, I'd say 5 to 7 days. And a month ago, we were seeing turnaround times even quicker than that. But going into the next month or two, we have to be realistic. We're in the busy season for all of these stop loss carriers. So it might take 2 weeks to get stop loss quotes back when we're in the fourth quarter. Just want to be realistic about that.
I mean, sounds pretty fast to me, but what do I know? I think that's still a great turnaround time. We've got a question here, and this was in regards to when we were speaking about the Difference Health Plan Pharmacy Coalition and talking about the authorization of those specialty drugs and how they're carved out. Who handles that process? Like, who handles the pre-authorization? And if you decide to carve it out, who's going to manage that?
Yeah, great question. And we're selecting one of the PBMs to be the primary administrator for that specific customer, right? So that PBM is going to handle most of the prior authorization work. But then if it is going in the specialty bucket, we also have another entity that we have partnered with, a pharmacy specialist consulting firm, and they are actually getting the PAs routed to them as well. They're going to do a second look at it and see if that drug is eligible for one of the specialty carve-out programs that we talked about. So having that team involved with the Difference Health Plan is really key, because they will help with all those prior authorization reviews, making sure that we keep things streamlined, but also find those cost savings solutions for the right prescription for the right group that wants to be doing it. They are also doing the auditing of the contracts to make sure that we're keeping the PBM that is selected true to their contract terms. So that was a great question I saw in the chat as well. We will make sure that we're validating rebate amounts, validating discount guarantees. That's all going to be part of our annual auditing process on the PBM side of the house.
Yeah, great explanation, Chris. So basically, Wade and Adrian, we got you covered. We've taken care of everything, and we've done a really good job of validating and checking things out for you.
Yeah, there's another question, Taylor, in the Q&A here from somebody anonymous, but they're asking if we're willing to use regional networks, and we are. So we're not saying these are the only networks that you can use. If you've got a strategy to use a regional network and they're willing to partner with us, we are more than open to that. I was in the Mid-Atlantic market last week in Maryland and Virginia, and a consultant said, look, I've got a great deal with Care First. I think they might be able to actually provide their regional network in this area, and we're more than open to that discussion. So if you've got a regional network that you love to use, would love to have that discussion. Definitely open to that as well. There is a quote request form. I think John had this question. So I would ask your senior consultant, or if you don't have one yet, just email sales@differencecard.com. We have a one-page easy quote request form, just gives us some information about the customer. Work that through your senior consultant, though. They will handhold you through the process and even help you fill out most of that form. And they will then get that into Difference Card underwriting, which will handle the quote process to get it back for you. There's a question there about Wisconsin. We will go down to 25 lives in that state.
And Chris, I thought this was interesting, if there was any preferred industries.
I think we have recognized that the Difference Card in general has done really well in the healthcare industry, in the manufacturing space, with nonprofits. And we recognize that some of those are going to be risk adverse and they'll stay in the fully insured space, but some will have a lot of opportunity for savings by going to that next step with the Difference Health Plan. Education customers, these are some of the top industry verticals that have worked really well for us historically, and we anticipate this solution will work for them as well. And then in terms of ultimate pricing authority, I saw a question about that in the Q&A. Difference Card will have the pricing authority on the services side of this, right? What the actual PPM costs are to your customer, that fixed cost component from an admin services only perspective. But then the risk bearer, if we are quoting the stop loss, they're going to have the actual stop loss pricing authority that we're going to be working with, that direct carrier. So it'll be a partnership between us on the services side and the risk bearer of the stop loss arrangement.
And Chris, I think you spoke to this a little bit, maybe in an answer to someone in the chat, but I know we've had some questions come through on New York and New Jersey specifically. I know we work with a lot of partners in that area. What is the minimum size for New Jersey and what is the minimum size for New York?
Yeah, New York is unique in that it's going to be over 100 lives. You can't write stop loss below 100 lives. So it's 100 plus in New York. New Jersey recently changed some of their rules, so we can go down to 25 lives in New Jersey. You've got a lot more flexibility there. And we're talking about enrolled employees. So there's a good clarifying question there in the chat. 25 enrolled employees would be lives to us. So that's approximately 50 members if you just double the subscriber count.
Great. Thanks for clarifying, Chris. Did we get to everything in here? I'm going back and looking through to make sure we didn't miss anybody. Is there anything you're seeing, Chris, Steph, Josh, that we should touch on before we wrap up today?
I think we got to most of the questions. If you do have a question that you're thinking about, but maybe you don't want to share with everybody here, feel free to reach out to us. You can reach generically us at sales@differencecard.com. You can go to the website and fill out a quote request form. Or, of course, if you've got a senior consultant that you work closely with, connect with them, ask them questions about the program, and they can help you through getting a proposal. And would love to dig in further with all of you. We recognize that this is a short time to dig into a really complex topic. Healthcare in general and the self-funded solution can be complicated. We recognize that. So if you're interested in learning more, we'd love to set up some future sessions with you and your team.